Welcome to Revere Asset Management's Your Money with Danny Stewart.
The market will always overshoot to the downside and to the upside.
And Don Vandenbord.
Because it's not how much you make in the markets, it's how much of that you can keep. You got the B team this week hosting. Let me kick it off with this. To Don, Dan, and team, thank you for all you do and are. Congratulations on your earned success. You have assembled an incredible team of smart and ethical traders that give me peace of mind. Your upcoming closing of Grotection has moved me to do what I should have done sooner. I managed to keep up with your close to your performance, but it's taken a toll, so now I have no excuse to not take better care of myself and my health. By way of history, I followed IBD for over 25 years from the physical paper to today's digital offering. I watched IBD live religiously since the pandemic and with my employer, and when my employer sent me home, I finally had time to concentrate on the market. I found Revere with Don's first guest appearance on IBD Live. When the show ended, I told my wife that I finally found the people that I could trust with our retirement nest egg. So I'm moving all of my remaining money to Revere, and I have some questions. I have some low-cost positions that I purchased in March 2020 and others from late 2023. How would you intend to manage those positions as you assimilate? It's going to be really hard for me to transition from an active trader starting my workday watching IBD Live and following the market all day to a spectator as your team works their magic. That transition will be eased in knowing that I am in very capable hands. Thank you very much. This is why we do what we do, period. This guy was a client. He's been a client for a long time. We obviously did good enough for him to, this is from the mailbag, by the way. Obviously, we're very pleased with the result of this, but that's the result of this is not what we're aiming for, but it's what we get when we do what we do, and people are exposed to the way we manage things here at Revere, and the results match what we talk about nightly in the videos. Ted, Connor, Todd, all the content that we put out, and I couldn't be prouder of this team or the results or the success that we've recently achieved. I always knew in my heart that the more people that found out about Revere, it made sense. We explain it every night. We don't hide from anything. We give every trade that we do, the good, the bad, and the ugly. And we have a very, very tight process that we're all on board with. And one of the kickbacks that we get from the buy and hold / pie chart crowd is the fact that I'm going to talk about another mailbag. This was a text that we got this week. Greetings. Here's a graph of the poor active managers. Why even go with them? 9 out of 10 suck. My response was, we fight that battle all the time being lumped in with underperforming active advisors. And this guy who's a longtime follower, over a decade, said, I told Danny this years ago. In baseball, there are 25 real players on a major league roster. They're all professionals. If they don't do well, they get cut. For any given team, there are only 1 to 2 outstanding players. Fan favorites aren't included. These are the all-stars. Maybe your team really rocks and you have 3 studs. In reality, you only have 10% of the pros that are outstanding. This is just the law of numbers. This applies to your boss, every field named like doctors, lawyers, plumbers, and money management. Why would you think any differently? It's not personal. The chart confirms this. It also shows that half of the money in firms belongs in the minors and the rest should be outright cut. We're very proud to say in Revere, and our performance speaks to this, that we're in that top 5% of all stars. I can't find another mutual fund, either active or passive, that has put up a combination of the gains that we've produced over the last 6+ years combined with the minimal drawdowns that we've produced. Our clients see this. The popularity of Grotection has forced us to close it at some point soon, but don't worry, we're not shutting the doors as an asset management. TurboTection can more than handle more assets in, and we'll have an additional portfolio with the indexes, ETFs, and mega cap stocks that we are convinced from our back test will do extremely well also. But to our loyal customers and people that come in, we don't want to shut them out from some opportunities by getting too big. And the critics that are going to say bad stuff about asset management, all we say is call our office. We'll give you our returns. They're audited, not GIPS compliant, but they're audited by our record keeper, Advision, who does this for hundreds, thousands of other advisors. They get a feed every day from Schwab with our balances. And again, you can't hide from those numbers either. Plain and simple, it's the scoreboard telling you what's going on at Revere. People joining Revere, people bringing more money to Revere. There's going to be a point to where in the future, when we reach $1 billion, that's a drop in the bucket in the investing community. But those people that are with Revere will be treated better than any asset manager could possibly treat their clients, will be more open than any other asset manager as to how they treat their clients. We'll continue to make nightly videos detailing our process. We'll continue to talk about every trade that we make, every position in the portfolios, and why we do it, and more importantly, give our read on the market. Over the last week, it's Friday at right before noon. At 10 o'clock this morning, we had a big binary event. That was Jay Powell speaking at Jackson Hole. He basically said in his speech that it's maybe time to moderate policy a bit, i.e. meaning cutting rates. The market is taking it very well. It came, it basically, the moving averages that we talk about, we closed at the S&P 500 at our key short-term moving average. That's the 21-day. We closed right there yesterday, and we're slingshotting off that level. The good thing about binary news events like this is it gives you a great level to trade against. Today's lows should not be breached if the market is going to continue higher. We don't argue with the market. We just go by what it's telling us, the price and volume action, and you can see very clearly on this chart that this recent downtrend line, just from the last couple of weeks, has been broken emphatically, and we're right back to all-time highs. And intraday pullbacks, I'll bring up a 5-minute chart here, have been very shallow. In other words, we got the gains. There's not a knee-jerk reaction to sellers. That's not to say that it won't happen by the end of the day. But for a while, we were talking about 6,400 as a floor for the market. Let's go back to the 60-minute chart here. 6,400, there was a breakout level there last week. We got back below it those last couple of days. And in fact, 6,400 was acting like it flipped from support to resistance. But that was very clearly broken right in the 5 minutes after Powell's speech today, and we're continuing to the upside. So we're going to continue to ride the wave along with what the market's doing. Additionally, small caps have been lagging big caps for years. And look at this. Major relative strength that started 2 weeks ago. We had a pullback right to our key short-term moving average, the 21-day, and slingshot off that level today with the reaction to the market. Still, we haven't even cleared the highs in small caps from last November. That's how bad it's been underperforming. But that's yesterday's news now. Things appeared to have changed 2 weeks ago. We pulled back, tested that pullback, that breakout, and we're off to recent highs in small caps. And all of this is just additional good news for our clients and for the market. And like I said, it gives you, let's go to the NASDAQ 100, which had been the leading index all year until last week and early this week. It's regained the 21-day moving average after spending 2 days below it. So that goes from a change in character, short term from negative to that, back to positive. All of the 6 indexes that we track every night in videos are above their long-term, short-term, and medium-term long-term 200-day, medium-term 50-day, short-term 21-day moving averages. The RG8, which is our 8 growth ETF composite that was created back in 2021 to better track what's going on in growth land. Ted has a very interesting chart to show to that. When he presents, that's near all-time highs. Actually, he sent me that chart, and let me bring that up right now to further cement. This is created by TradingView, and that allows you to do a composite of the 8 ETFs. And very simply, let's bring this onto the screen here, and it's at all-time highs. So the RG8 is saying very emphatically that Growthland is alive and well, and you can see the slingshot that it made off of the tariff tantrum. And here we are. Powell said in his speech, he mentioned that tariffs, while we see an impact, they may be a short-term, one-time impact, and that was another thing that the market liked to hear. But the RG8 being at all-time highs, all of the 6 major indexes above the key moving averages, leading stocks acting extraordinarily well. I went over 7 that were in the 21 over 21 list that were breaking the 21 this week. Most of them have all regained that level. So nothing wrong with what we're seeing here. We'll continue to, every night in our videos, get caught up on what we're doing in the portfolios and our overall outlook in the market. Our popularity is growing in leaps and bounds, not just in asset management, but also on social media. Our newest employee, Jacob, is doing a fantastic job creating some shorts out of our content, and those have proven to be very popular. I imagine he'll cut some out of this podcast too, and they'll make their way out there for people to see what we're doing. But it's a common sense approach, same way you treat everything else in your life. When the check engine soon light comes on in your car, you take it in for to get it looked at. If it's going to be cold out, you wear a jacket. If it's going to be hot out, you don't wear a jacket. If it's going to rain, you take an umbrella. That's how you react to everyday occurrences in your normal life. And we say, why should your investments be any different, provided you've got the right team on your side to tell you what the weather currently is and give you some insights into the outlook down the road. We don't make predictions, but we have expectations, and we can marry that to the way we're treating our portfolios and explain it every night on video. And we got a great team. We very much appreciate the kind words that come our way all the time, and we're going to continue to grow and treat our clients well and maintain that 99% retention rate that we have. The only reason that people leave is because they think they've learned that. We had one person leave who had unrealistic expectations when he came in earlier this year. We had 2 people leave because they think they've learned enough from us to manage their finances by themselves, and we wish them the best of luck with that. But people come with Revere, they stay with Revere, and they almost without exception end up bringing the rest of their assets to Revere. And this is your chance to join those people. People reach out all the time, get busy, and get sidetracked, but there's no reason for your nest egg to get smacked by the market. We're completely in the opposite of that market right now. That's another reason why people deride people that do what we do. They tell us like we have to be right twice. We have to be right on the exit. We have to be right on the reentry. No problem. We think we describe what we're doing every night, like I said in videos, on the videos, to the downside and the upside. We've got rules to get in. We've got rules to get out. I was talking to my wife last night. I said, big occurrence at 10 o'clock Eastern tomorrow. Jerome Powell, the market will be watching what he says about interest rates. And she said, well, good luck to you guys. And then she paused for a second and said, I really don't have to wish you luck, because she knows well enough that regardless of what happens, we've got a plan for it. If it breaks out to the upside, we'll take appropriate action and talk about it in the videos. If the reaction is negative, we'll take appropriate reaction and talk about it on the videos. And not a lot of advisors do this. And we've got a solid process to keep the equity curve smooth and going from the lower left to the upper right, if it was on a map of the U.S., without any detours down to Texas, even though they could say hi to Dan and Zach, you too. While we take a detour to Texas, we prefer they just call or wave or whatever, because we want to keep that equity curve going up and to the right. And that is it from me. I'm going to turn it over to the team, who, as usual, has some great presentations. We're going to, Todd and Connor are going to talk about some great leading stocks that we're not only in, but also looking to add to. And Ted's going to give a crypto update. So, Connor, why don't you take it away first?
Yep. Thanks, Don. You could start with the chart of ALAB. And today I'm going to talk about 3 different positions that we own in-house that we like looking to add to. And the first one is Astera Labs. And this is owned in TurboTaction. And we took a position on July 24th. So you can see that before July, you can see that big digestion, tons of frustrating people just going sideways back and forth. And then it gapped out of that range. And to me, that told me that, the stock's breaking out. Buyers are finally stepping out, because it had about 4 failed breakouts in that range. And just trying to time something in a range can be difficult. And that's why we focus on relative strength. And then, so took a position in ALAB on the 24th at around $122 a share, started inching back up and didn't add to it because it had earnings coming up. And then it was a nice surprise that day. ALAB had a huge gap up on earnings. I believe that day was, hot mid 20% on huge volume, and they had just a phenomenal earnings report, triple digit revenue growth, triple digit EPS. And this one is one of the leaders in AI in tech. They have partnerships with NVIDIA and AMD, so that solidifies their name. They have amazing earnings, amazing sales, 76% margins. It's a recent IPO. It has a 99 composite rating, and it's just coming out of 2024 high. So this is one of our favorite names right now, fundamentally and price action wise. It's acting really well, and you can see it had a little bit of turbulence. In a podcast a couple of weeks back, I talked about different ways to play the earnings gap, and this one was a perfect example of pulling back to the low end of the range, didn't undercut that gap day's low, found support at the 21-day moving average, and this one's coming back up nicely. So this one's acting well for the portfolio, just up under 50% on this one, and we'll be looking to add on to it as well, as it's acting quite well. And if you go to the weekly chart, Don, and you can see that, not too extended. It's just breaking out of this big weekly base, and as long as the market holds up, expectation would be for this to continue and to lead in the tech sector. So that's Astera Labs. Like this one a lot, and I know Don traded this one in 2024 on that earnings gap and had a really nice run as well. And then next one is Bloom Energy. So this is a new position this week in TurboTaction. Initially took a starter on August 20th at $44 a share, and then added on to it the following day on August 21st at $45 a share. And this one's breaking out of this high type flag, having quite a nice day. And there's a lot to like about this one as well. If you go to the weekly chart real quick. So there's a couple things that I like about this. One, this is coming out of a huge multi-year base. The stock has gone sideways for over 5 years and essentially has done nothing. Yes, there's big moves, but in terms of at highs, this has just been in a huge range. And if you bought 5-10 years back, well, it has done absolutely nothing for you. And there's some big changes in this one. If you go back to the daily, they recently had a partnership with Oracle, and that is what prompted the gap up on the 24th, I believe. And you can see that huge gap up on volume breaking out of that nice range. And then they're recently turning profitable. So a huge, huge shift. Breaking out of an 8-year base, finally turning profitable with partnerships with Oracle in the hottest theme right now. The U.S. government incentives are boosting Bloom's hydrogen-powered systems with all the data centers and swinging into making money now. To me, this looks like a big inflection point for the stock, and the price action is agreeing here. So like this one a lot. And just to add, 21% short interest for a stock that's at all-time highs could add some fuel as well. That's Bloom Energy. And then Robinhood, that's the last one. This is owned in both Turbotection and Growtection. And one thing I wanted to bring a point to this is you hear a lot of people say, zoom out, use the weekly chart more, but you can only do that if you have cushion. And both Turbotection and Growtection have cushion on Hood. This was bought in May for both portfolios. And if you zoom out to the weekly chart, something that William O'Neill, a lot of Cansom people say, is the first touch of the 10-week moving average is typically a buy. And since April, this was the first touch of the 10-week moving average for Robinhood. And given that both portfolios had cushion on this position, we could be a little bit more patient with this one and use a weekly moving average, given that it was trimmed up on the way up. And this is acting exactly how you want a leader to once it touches the 10-week moving average. And looks like it's going to close the week strong. So again, moving forward, this week's lows will be important, but I think this is a great example of sometimes if you have cushion on a name, don't overreact, don't panic. As it's coming into the 10-week moving average, let it, watch how it reacts at that level. There can be fear in the moment, but now 3 days later after that touch, it's just a tap of the 10-week moving average. The stock's back above the 21-day moving average, and this is kind of now forming a base that we'd be looking to add on to.
Great stuff, Connor. 3 solid names, all backed by our research and our reason for getting into it. BE, we talked about this early in the week at the team, because what was it doing while the market was pulling back? Look at the relative strength line. And look at how it exploded on Wednesday off of this 40 level after this pullback and regained the 8-day exponential moving average on big volume. And now back above the 8, riding the 8 higher. Great job adding this one to Turbo. All right, let's pivot over to Todd now. He's got 3 more nice names that are leading and part of what we're holding in our portfolios. Take it away, Todd.
Thanks, Don. I'm going to talk about 2 plays that recently pulled back to their 21 EMAs and presented potential entry points, which we did on both of those names, and also a name that was an earnings gap play. Let's start off with Reddit as being the first name that pulled back to the 21 EMA on the most recent pullback here. This is a name which had a nice earnings gap, and Protection was involved in this name. Don and I both took offensive sells on this a couple days before the top. So with the intention and the expectation of a pullback after 13 straight higher highs in a row, which is just unprecedented and shows extreme strength in this name. And it went through, broke the old all-time highs from back in July, or I'm sorry, from January, February timeframe. And a lot of times you'll see this where a stock will go straight up, break the highs, and then settle in. And all we were waiting for is an opportunity to get back in the position. And on Wednesday, we had a nice test of the 21 EMA and a hammer candle off that 21 EMA. And yesterday, we both took positions in this to add to add that offensive sell position back. And today it's following through, and we would expect this to continue higher. So again, all of these names have excellent earnings growth, can slim characteristics, and are profitable. And this is one of our top names. The next name is MP Materials. And it's another name that has displayed extreme relative strength. This is a little bit different of a situation where the government is now heavily involved in this company and will basically buy every single ounce of production that this company can produce over the next decade at double the prices of the raw material that previously they were able to sell it for. And it's got a wall of triple-digit earnings growth coming up because of that. So again, it meets our earnings characteristics, and it's got triple-digit sales growth coming up. So it's a rare situation where the government is fully vested in this company, first and foremost. Now, it also presented an opportunity for us to take a position off the 21-day moving average. And we got that pullback after it broke through its all-time highs going back several years. And, now we will see and monitor this position. Yep. So again, both Reddit and MP were able to pull back and test those 21 EMAs. And from here, we just will manage that position with a stop below the 21 EMA or yesterday's lows. And finally, SE. This is probably one of the nice looking earnings gap that we've seen here out of the recent earnings gaps of the past 2 weeks. Not quite a monster earnings gap. That requires a 20% or more gain, but it was 19.5% approximately. Broke out of a base, held. It's been riding the 8 EMA all the way up, and this is a stock that just looks stellar. This is one coming out of the weekend review that just looked so awesome coming into this week. As the market sold off this week, it never gave back much. It, came down, tested the 8 EMA, and that was it. And today it's breaking out to new highs. So these are three names that all are extremely strong, extremely liquid, with very nice growth characteristics as well. And this is another one with 90+% earnings growth for the next quarter and 25% plus sales growth. And that's it. Thank you, Don.
All right, great stuff. It all starts. The foundation of everything that we do started with the legendary book by William O'Neill, How to Make Money in Stocks. And we've taken that. Things have changed a bit over the years. We've modified some of the rules to meet our portfolio management requirements. But at the bottom line, we're looking to buy leading growth stocks during market uptrends, identify when the trend is changing, lock in those gains should the trend go from up to down. And that's why our flagship portfolio is named and trademarked Grotection. And these stocks fit that. They have growth characteristics, liquidity, leaders in their field. The most important letter besides the M in market in CanSlim is the N for something new. And pretty much without exception, every stock that we buy has something new, something that changes the way we live, work, or play. And it's just a template. We use it over and over again. Make sure that we don't lose big, and it works. All right, let's pivot to crypto land, which Bitcoin had been under a little bit of pressure leading into Powell's speech. But Ted, how did it react?
Thank you, Don. So in the past 2 weeks, Bitcoin has seen some pretty volatile and crazy action. We broke out of this base, as I've shared on the podcast before, and really just 4, 5, 6 day momentum move, but then it stalled out. And one kind of big character change I initially realized was on all previous major Bitcoin breakouts, like right here after the election, right here after the BlackRock IBIT ETF announcement, this as well off the 40-week moving average. Those are three of the last major breakouts. We saw multiple green weeks in a row. And immediately this time we stalled, reversed back in. So my expectation was, oh boy, we'll probably be in for some chop. And that's exactly what we got like 3-4 weeks later. Last week, we decided to close at a new all-time high, but the next day we saw a bearish engulfing off hot PPI, and when we had that reading, markets immediately started expecting less rate cuts, and even the September rate cut coming up was put under pressure. We went from guaranteed rate cut by the markets, 100% probability, down to 75% this morning, and that's what led to some of the weakness in all markets: S&P, Nasdaq, small caps, crypto, and that's kind of what we saw in the last week, pulled back into this morning's event. But in his speech, he was signaling towards those rate cuts. He addressed some of the concerns markets had about inflation, unemployment, and tariffs, and we are reacting nicely across the board. You can just see from stock indexes, crypto, pretty much everything green across the board. And the things that are red, like the VIX, is what you want to see. And so it's great. We had this retest of the previous breakout of about 112,000, and we undercut this this August 3rd low and reclaimed it today, as well as the breakout level. And that's exactly what you want to see, that type of reaction on a retest. And now we're putting in a power of 3 setup actually with the 8, 21, and 50 bundled up together. And so we'll see what happens going forward. But typically, Bitcoin in its history loves to see failed breakouts and failed breakdowns and then put in some new highs. So let's see what happens here. Right now, it's a complete mirror action. We closed at new all-time highs, bearish engulfing, and here we broke the lows of the base, and now bullish engulfing. And so it's pretty favorable action now. And like right here, a failed breakdown led to new highs. Right here as well, if we go back all the way to post ETF announcement, we had some optimism, failed breakout, shook out the lows end of the base, reclaimed as well, and then broke out to new highs too. So Bitcoin, nice action, was hang by a thread, was almost on the cutting block, at least the trim, but after this action, of course, we're going to hold on to our position. Now, Bitcoin has led the previous market cycles in crypto, but it seems like we have a new leader now, and that is Ethereum. And there's many tailwinds for Ethereum in the last few months. First one, of course, or first two, of course, are the Genius and Clarity Acts passing, giving regulatory structure to cryptocurrencies and stable coins. And the big one was stable coins, because Ethereum has a lot of utilities for stable coins. Many people build projects on the Ethereum blockchain, and that is why this has become and risen as the leading crypto right now. And really, this is just perfect in textbook technical analysis. Big move up, broke the last 1 year high of 4,100, overshot a little bit, but found resistance at previous all-time highs, then pulled back right to 4,100. And that day, it undercut it by 40 points and reclaimed it as it found support in the 21 EMA. And that's just perfect action so far. Formed a nice flag. Yesterday was an inside day, and today, off the good news. We're pretty much blasting off into new year-to-date highs, just off a little bit, but just great action here from Ethereum. Really a textbook. Super linear on the uptrends, clean pullbacks, respecting moving averages, exactly what you want to see in the leader and a stock, a crypto or stock that you hold. So that is Ethereum. And then finally, a more higher beta name that we are trafficking in as well with a smaller position is Tom Lee's Ethereum Treasury Company. Their goal is to buy about 5% of all Ethereum. I think they currently own about 1%. And this made a huge move off that initial IPO. or I think it was IPO or spinoff, or whenever they announced that news. It pulled back huge, but linear pullback, found support the 50-day. Saw a nice 100% move, and this pullback is where we started to get interested and took a 2.5% position in Turbo. And this is looking good too, back above the 8 EMA, especially with Ethereum acting strong. So, yeah, crypto's under pressure. Even stocks were under pressure as well. But it all came down to Jerome Powell and forward guidance for monetary policy. And so far, we're reacting pretty well.
All right, good stuff, Ted. And that's it from the tech team. So I'm going to send it back to the spirit of Dan to wrap it up. All right. If you like what you heard, tell your friends, tell your family. Check out our website, revereasset.com, and we'll see you next week on Your Money. Not their money, your money. It's not how much you make in the markets, it's about how much you